going to do tonight, which is using charts or technical analysis. But there must be always a story behind it um, to have a conviction, to have a convincing story that what we are chatting ahead of 2025, what is the story behind it? Right. So my name is Con Hao. So I have designed this topic, and I'm all excited to share what we are going to share or spend the next 1 hour together. So there will be a time of Q&A towards the end. And what I intend to do is that to share with you some fundamental of what is happening. And inflation is still a key concern since 2022. But this year, China seems to be there's some development we're going to discuss about China market as well, and how is it going to impact the rest of the world, and of course, not forgetting Singapore is essential. Then I'm going to share with you the market outlook of 2025. The focus it will be China and Singapore. Singapore market, that's how Singapore market is going to affect by or the attributes that is going to bring to Singapore market. But of course, I will also share a little bit about what's happening to the US market. So in short, I'll be sharing the market outlook for between US, China, Singapore, and I will share with you my view on the commodities market as well, and followed by the Q&A. So these are some apps that SGX has invest into it. I really encourage you to download the app if you can. It was this app was to me, my opinion, that they have invest a lot of money since before COVID, and um, and do get hold of it. And once a while, I'll be also reference to what is their inputs over there, and they have a team of expert behind. Every day, once a while, I will just go and look at what is the latest development, including tonight's topic about the China market. I make reference to the team behind SGX, what they have produced. Does it match according to what my outlook is? All right, so let me just give you the pigeonhole information. You can go to pigeonhole at .at, and the passcode is 21NOV24, all in capital letter. And what you can do here is yep, all in capital letter. And what you can do here is you can go to this link and key in the password and can start to submit your questions, or sometime along the timeline where if you find that whatever I mentioned seems interesting, you can start to fire your questions, and the rest can definitely vote for their question. And if there's a lot of question, which is a good thing, then I will take on maybe the highest voted question first. Okay, so of course, this is the QR code format. You don't have to go to the link. You can just do a scan and submit your question. So anyway, before the Q&A, I will show the screen again. Yeah, so not to worry. So, but if you want, you can take a screenshot if you can. Okay, let's get started. So tonight, for those that just joined us, let me see how many participants we have at the start at 7:30 sharp. We have 61, now we're 73, so we're good to go. And we have about 100 plus registered, so it's about there. And we're going to discuss about the market outlook for 2025, and it's beyond technical analysis. We're going to see whether there's a match of what's happening, the story, that what we're going to project, will it come true. Of course, I'm going to give you some case study later on of what we have done in the past. So my name is Conal, just a very short introduction about myself, and I specialize in market behavior science or the market psychology. And literally, we can use this behavior science to find the different elements, geopolitics, development, science. We can use all this element, and including chart as well. I use that very effectively to identify when is the next macro trend about to come. So I felt there's Asia, but I think I would try to give you some elements. Why China is a switch starting from 24th of September, and it is also bringing some attributes that later on. So between that, some awards here, and the latest award that I have is being one of the top 3 one of the three wizard in 2024. So I think there's only total eight of them. I'm only Singaporeans. One in this year is one in Turkey, I think, and the other one is in Asia. I'm the third one, I believe, and one is in Turkey and one is in Korea. So what is this trading view wizard? Is that those top traders or investors who share their sharp insight and make trading view their tactical base? Yeah. So which I'm not selling for them, but I'm using their product. So if you want, you can use them. It's free, just like how we use SGX platform. Their research is free. Yeah. So disclaimer, and it's important. What I'm going to share with you definitely is a conviction that I have that I've already been doing, and even more. I hope I have more surplus cash lying around, so I want to buy more. But whatever I do is whatever I share tonight is based on my personal conviction for my own personal consumption. For the rest of you that are listening in, I hope that you have a good influence over what I'm going to share the next 1 hour. And you definitely got to check with your financial broker because they're licensed to advise you on that. Okay, let's get started here. Okay. And before we get into the topic about inflation in China, let me just talk about what did we share on 29 August, which is about 2 months ago. And 2 months ago, we shared about on this STI um, quarterly chart. Um, for the longest time, even Singapore investors say that Singapore stock market are boring. Actually, it's not true. It's just that Singapore market has been range bound between this range. And I would say that for Singapore market, more than 10 years ago, I prefer not to have a passive investment strategy because if you look deeper into Singapore market, they are cycle. Yeah. So every time the bigger market move up, we move up. When it come down, we come down. But pretty limited, I would say. But you could see that they are within since 1999. If you are really start investing, there's one cycle, two cycle, three, four, five. And but on 29th of August, I did a sharing with SGX partner, which one a local broker. And I say that I'm going to look at Singapore a little bit differently. I'm not going to be a so-called active investor. I may want to remain passive moving forward, provided technically it closed above around this region, about 3,005. Yeah, that would be for first time. I want to see it close above. Then, because all these are later on towards the end, I will share with you the yearly chart. But all these are major resistance. You have to look at it throughout the history. It was tested, but it failed. Tested, tested, it failed. Tested, tested, it failed. So these are crucial resistance point somewhere at around this level, about 3,005. So technically, but you have to understand what is technical analysis. Technical analysis, it means that we're analyzing the prices. Yeah, so the prices itself speaks to me a lot because prices are transacted by investors, and investors, of course, within their retail investor, their fund, their top traders, their people like Warren Buffett. So we are analyzing the price behavior of the market. So I would say that 3005, as you can see here, is a major resistance. And then on 29th of August, I say that I'm waiting for the timing. Remember that what I said earlier for Singapore market, I'd never be one to be passive. Passive means that you buy and hold and do nothing. I want to be a bit more active that take on every cycle. Every cycle that develop, I take on for the last 10 years. But I say moving forward, if I kind of mentioned that if the big boys, I'm actually referring to China, start to move, I think that will give some attributes to the Singapore market, and not just in the Singapore market, but ASEAN market. Then I think the whole landscape investing into ASEAN is very different. That if is how about the price going to tell me is that if it close above this 3,005, I think moving forward in 2000 2024, 2025, the whole landscape will be very different. Let's look at what happened to the market today. Okay, today the market is trading at 3743. I prepared this about 2-3 days back, and we could see that for the first time in history for Singapore market. I know there's period like that, but later on we're going to visit the yearly chart. So at the end of this year, I hope that the Singapore market is going to close at about 374, about 3,007. It must be convincingly broke and close above 3,005. So then, in this technical aspect, in analyzing this price behavior, is more of a substance that I believe that I do not want to be actively trading in the active investing into the Singapore market. I want to invest and hold them and maybe do nothing. And of course, I want to accumulate more of Singapore stock market, and especially those that pay dividend and just hold it for a longer period of time, maybe into the next few years or next 5 or perhaps even 10 years for some good ones. And I believe that Singapore market going to trend. We're going to study into that how it is going to happen. Okay. Now let's look at the inflation first, because before I discuss about the market outlook for Singapore, for China, for US, and for commodities, let's also understand about the important topic about inflation. And what happened to inflation here is that, of course, if you still remember, the inflation hit a high of 9% for US. That was not too long ago, about 2.5 years back or less, in June 2022. Yeah, so all good news, it came down to about 2.6. So the US central bank, what they hope to see is that the inflation would stay, not just touch, stay at about 2%. So I just draw a band between about 1.5 to about 2.5 that will average out to about 2%. And that's what you could see in the average of 1980, somewhere around 1983, all the way to uh, shortly after COVID. It kind of broke above this band and went up to 9% for the first time. Pretty scary. And I also drew a technical analysis here. Now, all these are not just charts. Yeah, it's beyond charts. It's about where you have to understand that we're doing and analyzing on what's technical analysis, analyzing on the price behavior. Yeah, that's what I'm trying to say here. And what we see here is that over the last 40 years, if I draw a downtrend line, it fit quite nicely on the tip here, tip here, tip here. And this 9% to me is very significant because for the first time in history over the last 40 years, and of course, even many of us before we were born, it broke at 9%. So this became a very crucial. Yes, I think the Fed over the last 2 years have did whatever they can to hike the interest rate, and that brought down the inflation. And but they're still watching it very closely, because you may have heard that um, everywhere, and it's not just in the United States, that compared to about 2 years ago, before June 2022, many of our consumable products, the things that we use, is never the same. Yeah. So if you just calculate back all the way back to maybe before COVID or before 2022, just do a very simple memory collection about how much was a simple plate of wonton mee in 2022. Yeah. So we may never go back to that kind of prices again. So now Singapore market is really not too bad in terms of inflation because we have a strong Sing dollar. But I can tell that if you go to US, it's much worse. And they knew that the commoners in the United States, they knew that it's not going to go back, the bread that they bought, the eggs that they have, it's not going to go back to before 2022 or in somewhere around before 2020. So people will have to live with it. So now any movement that the inflation started to make a U-turn, it will create a significant impact to the market. And on the 14th of November, Fed just make a statement here. He said that we are in no hurry to reduce the interest rate. So far, the interest rate has been reduced by 50 basis points, 25 basis points, so total 2 times, total 75 basis points. So I think unlikely it's going to reduce anymore in December. There's one last meeting on at the end of this year. So to me, it's also quite indicative. When he made that statement, he said specifically about when in no hurry to reduce the interest rate. It means that they are still keeping inflation on check. We want to watch it very carefully, because this may be, a consolidation period. This can spell off, those who into elite wave. This can be 1, 2, and 3. Now, why I say so? Because of what is happening around. Some of you may know that central banks around the world has been buying a lot of gold, and gold is assets of inflation hedge. Yeah. So third quarter this year they have reduced the purchase, but that doesn't mean that they're selling. They just reduce it. Means that they're not buying as much, but they're still holding the gold that they accumulated, especially over the last 2 years. So gold is still at a high price. If you can see that recently gold come down to below 2006, but now it's creeping back up to 2007 again. So gold is an inflation hedge. It means that we have to look at gold not just a market, but why investor and this time around is that central banks around the world are investing in gold. So to me, it sent a very clear signal that central banks around the world, they are looking at inflation very carefully. They have to buy some of this as an assets to hedge into what may come in the future. So number 2 points that the escalation of geopolitical tension, that we also know that the past 3 days that the US allowed the Ukraine to fire a long-range missile to in Russia, and it did happen. Then now today, I think Russia, Putin make a statement that uh, they're going to counter, and I think they did already. I'm not too sure, but I haven't keep myself abreast. So now this geopolitical tension is just on the part of Ukraine and Russia and US. How about the Middle East? So nobody knows and how it will escalate. So we just have to be very careful because on any escalation of geopolitical tension, let's say there's any stoppages of flow of goods from one country to another, it will always happen. Then that will increase the price of all these consumable products. Then the next one, number three, is the effect of the Trump's tariff. So we know that, but not too sure if it's now is the president-elect. So once again, the president of the United States, whether is he going to carry out what he said during campaign is that he's going to bring tariff to even the European market, that whatever import into the country, they're going to impose a tariff. Whether he's going to do that or not, I'm not too sure. But according to his campaign, he said that this is what he may do. But any tariff that imposed is always no good because it's going to bring price consumer products to be a bit more pricier. Now, the last one is the yield remain high. And what I mean by yield remain high is that you have to understand that the difference between interest rate and yield. Interest rate, yield is interest rate. Or I would say that we have to understand the difference between the Fed funds rate and the yields market. So Fed fund rate, many of us will know that is decided by the Central Bank of the United States. But the yields are something like the lenders and the investors. They determine the yields. Yeah. So in a way, what is investor and lender determining yields? It's like the banks, investment houses that give you loan for your housing mortgage. Yeah. So these um, rates are determined by investors who lend you the market. So the yields and the Fed fund rate, they move hand in hand together to influence each other. Now, let's look at this very carefully here is that the first time Fed cut the interest rate, which was not very long ago, it was in 18th of September. After 2.5 years, they keep on rising interest rate. That was the first time that Fed cut the interest rate on 18 September this year, cut by 50 basis point. And subsequently, was it this month? Yeah, this month they cut again by another 25 basis point. But what I'm going to share with you here is that again, Fed fund rate is interest rate, yeah, and yield is also interest rate, yeah. Just that yield is determined by the investor, who are the lenders, yeah, the banks, and Fed fund rate is determined by the central bank. But we could see that for the first time they cut. Now, what we're looking at here is the yield. What is this 2 and 10 years yield? Because when it comes to a lending business, there's always a different tenure, right? For example, you want to fix your housing loan for 2 years, and in US they have 30 years fixed. So but different tenure will have different interest rate. Yeah. So what I have observed very interestingly here is that the moment the Fed cut the interest rate cut by 50 basis point, but from then until now, you look at the yield that is determined by the investor, who are the lenders, the yield actually have went up. So it means that the all these yields by the American markets, it means that those who get mortgage for their house, they want to renew their houses, it's going to get a bit pricier. So I'm not going to talk about the inversion of yield, but you see that there's always a risk of inversion again. And when the first time the yield got inverted, it was in July 2022. Of late, it come back down to normal, but it's still no good because the whole yield market is still about, if you can see, I just captured this about 2.5 hours ago, and the interest rate of the 2 years was at 4.29%, and 10 years is at 4.32%, and the short-term rate seems to be catching up very quickly again. It may cross above. It seems like it's at the meeting point. But whether it's inverted or not, we could still recognize that the lending rate is still pretty high. Yeah, although the Fed has cut rate. So therefore, Jerome Powell reminded us on the 14th of November that we are in, I represent the US Fed, in no hurry to cut interest rate. Yeah. So we've got to get a hint. If he says he's not going to cut interest rate, it means that they are still not quite certain that inflation is going to stay about 2.6. It may rise, so that would give them more room to maintain the interest rate as such. I think I spent enough time on that, but I want to quickly move into China market because that's the topic today, and how is the attributes going to bring to the Singapore market here. Now let's look at the China market, and the last sharing that we have in this year in 29 February. So I share about the title is about riding the winds with US market optimism, but we also mentioned about the China market. So since about 2022, when inflation hit the high of 9%, and that's my strategy for across three major market. US market, I am trading them. Later on in a short while, I explain to you why I trade them. I don't intend to be passive about them, to trade them. Commodities to buy them, that was in year 2022 up to about February 2022. But September, since the China have their stimulus, my whole matrix about investment has changed, which I'm going to share with you very shortly. And for Asia market, I accumulate them. Now let's look at the next chart here. This is accumulation. Yeah. So this was shared on the February this year. So accumulate Singapore market, generally we have in this range bound for the longest time. And many investors do not like that. They say that Singapore market is very boring, but earlier also mentioned that you have to go with the cycle. There's a few cycle within this 15 years market for Singapore market. But I believe that we're entering into a value phase. Personally, I coin it as in every investment cycle, there are four stages: income, value, growth, and decline. Yeah. So I suspect that Singapore market is going to go into value stage. And after value stage, the next stage, it will be a growth stage because of many things have changed, especially after COVID. It became so obvious that we became a hub of many industry. Yeah, so there's a lot of value about Singapore market here. So today we're in Singapore now. So now remember earlier I said that the US market since 2022 and the February this year, they presented topic US to trade them. Goal is to buy them, and Asia market is to accumulate them. Now let's look at the US market, how I trade them. So it's at this point, I just want to give you some idea about how you manage your investment here. We must have a team, and my team from 2022 even to February this year, my team for US market is to trade them. Now let's look at this is February 2024. Yeah, this year. How you look at how volatile the US market is. Yeah. You can buy here, but after about half a year, it's still at the same price. So what does it mean? Yeah, but ultimately it went up. You can see that how volatile the US market is. Yeah. So therefore, that's why the reason I want to trade the US market. Yeah. And let's look at the commodities market. Uh, when I say commodities, I'm referring to the gold market. I make this statement that I think a lot of economists, they like it. They say that, well, this is a very refresher thoughts that I mentioned. I said that as long as gold maintain at high point, gold is the leader of all commodities. The rest of the commodities were based on their time and season. It will start to move up. Yeah, the rest of them. So as long as gold is maintained a high point, I think inflation is still intact, and gold is the leader of the rest of commodities. So therefore, even in February this year, I still maintain a buy position for gold, and that's how we see gold. And of course, the last few days it came down, but now it's moving up back again. Now let's look at Asia market. Interesting here is that STI February 2024, or even all the way back to 2022, I've been adopting this accumulated concept. Now, what is accumulation? Accumulation means that between buy and accumulation. Buy means that I'm more serious, that I'm seeing that market is going to trend up. I'm going to buy. That means use whatever I allocated. I want to go buy serious about it. Let's say I want to buy up to about 15% of gold and make sure I fully utilize that 15% to buy to gold. Accumulation means that I also have I also have allocations I want to buy, accumulate up to about 30% into the Asian market. But I'm not going to do it one whole go. I'm going to break down to many tranches. I'm going to go slow first. Yeah. So now you could see that when February 2024 this year, all the way back to 2022, you could see how I accumulate the Singapore market. And this is what, for those that into elite wave, some of them studying the wave, they realize that that there's a first wave, second wave, and third wave is impulse wave, right? So I think I'm done with my accumulation, and let me just give you a preview of my plan for the Asian market. Now I do not just want to accumulate them. I want to buy them. Buy them means that I want to be so serious about it, which very sensitive on the timing because I think it's going to move up quite soon. I'm gonna buy them. Just now I explained to you what's the difference between accumulation and buying. Okay, so I've done my accumulation in Asian market, but now I seriously want to buy them. And I think this time around the STI Singapore market is leading the China market. Now look at that, is that February 2024 and even all the way to 2022, I've been accumulating some Chinese stocks here. And 24th of Sep, the Chinese government have announced a series of stimulus. I think they're not going to stop here. That's what I could see, that the first wave forming, second wave, and I suspect that the third wave in time to come may come. I only can use the word may come. So in every investment, we are taking some risk, but of course, some intelligent risk, I would say. Yeah. So based on my assessment, so this is what I will be doing. And let's understand about the Chinese market. Now, at this point, I want to be um, fair to yourself, because I think for the Chinese step is a mystery to even for the common Chinese over there. I think it's a mystery to them. So I read as widely as I can, and in internalize the news that I read. So I read from the West, I read from the Chinese market itself, and that means I read both side about the China debt. I try to form a conclusion, what is this all about. So is China still in debt? Yes, quite huge debt. But let me just share with you some story here. Is that China did announce that on the 7th November they're injecting 1.4 trillion. And by the way, this is not yuan, it's 1.4 trillion US dollars. Yeah. 1.4 trillion, yeah, that's what you can see here. It's 10 trillion yuan and 1.4 trillion US dollars into their local government. Now, let me just tell some history. I'm going to spend maybe about 4 minutes on this slide because it's important to understand about China debt. And am I concerned about China debt? My answer is yes, I'm concerned about China debt, but I have to understand what is it all about. So once again, we don't receive much writing about China debt, so I try to present it as quick and sharp as possible as I can based on my own interpretation. I can be wrong, so at the end of it, I will share with you my email. If I'm wrong, do share with me what's your thoughts about China debt. Now, we know that Deng Xiaoping came up with this open up of China in 1978. That was less than 50 years ago. Yeah, so China before that, when I was young, I remember that I have some relative in China. They asked my parents for money, and they sent us a picture of our family picture. Is that it's very rural, people are riding bicycle, that's about it. Yeah, so you don't see any tall buildings. That was 1978 and before. But since Deng Xiaoping opened up China market, free market, as free as possible, things have never been the same. So now, when did this infrastructure investment come about? I believe is somewhere about 30 years back. Then, of course, a lot of individual Chinese, when they do business, became wealthy, they have money, and corporation became wealthy, they have money. So then now the next step is that the Chinese want their local government, local governments at different provinces to issue bonds to build buildings, roads, highway, railway, whatever, okay, just to build the infrastructure. Now you have to understand at the point in time the Chinese got some money, some of the richer Chinese got some money. So they issue up bonds, local government, issue out bonds and investor buying the bonds. Of course, the bonds promise a yield return of your annualized interest rate. At the end of the bonds, your principal will be returned. So the local government used this money to build what? To build buildings, infrastructure, especially railway, highway, whatever can connect between cities. So now, of course, then the focus was heavily on infrastructure development, including roads, railway, what I said earlier. But China, if you look at the major cities, is quite well constructed. Everything need to be built is built. So the problem right now is that the local government could not get funding from their people because most of the debt they have are internal. Most of it, not all of it. That there's no story to sell that. We want to there's still more opportunity to build more roads and highway because basically it's quite done. So they could not raise much money, and what's exactly what happened in China is that different local governments are having this debt because they cannot receive fresh fund. Now, this is something positive that I know, which was bad because the debt is cannot be resolved. Now, what the central government do, and of course Singapore, we can't really comprehend what they mean by local government and central government. Isn't it the whole country? But I think if you're Malaysia, you appreciate better because it's the same concept. Malaysia, whether east or west, they have district, they have division, but most of the tax will go to the central government. So the central government will control all the fund, the money's mostly there. Yeah. So China is the same. Most of the funding are kept in the central government. So since the local government have problem right now, and what they committed, so this is something fresh on 7th of November, they say that they will commit 1.4 trillion over the next 5 years to tackle local government debt issue. So in short is that the debt that local government has in China is a debt swap. Yeah, so basically the central government is going to guarantee that they'll be fine, which to me that's a good news. It brought me a lot of comfort that if you're going to invest in China, I have to understand, I have to know that at least that their debt are being taken care of. Yeah, so now the central government steps in a way is doing a debt swap. Whatever debt they have, we're going to swap it. So it became the central government debt. Of course, the key question now is that whether the central government have the money, and I suspect that they may have a lot from the gold and the physical assets they have been buying across. Yeah, so that's something that I try to understand as much as I could. Maybe what I'm trying to say that I may not be accurately represented because there's no writing about that. So I try to internalize and try to understand what is this Chinese debt. So if any inaccuracy, I welcome your email to me and make some correction here so that as I continue to do this education work, I can have a better represented. But this is what I know. And now move on that we could see that the GDP of China over the past decades, they have depend on infrastructure growth. But now the new plan for China is that they are transitioning from a low-end manufacturing, just like in the past they manufacture buttons, shirt that wearing, I believe is many of it is come from China. The chair that we have, the toys that we bought are from China. Now they're moving into the high-tech economy. Now, so the question is that the first one is that their debt. It seems to me that there's a resolution to the debt. Yeah, so which is good. I think that's quite um, um, wonderful thing that they've done. The central government actually do a debt swap with their local government. So the debt, in a way, to me as an investor, there's some clearance. I can invest into China related company listed in Singapore with more comfort. Now, the next thing is about growth. Is there growth in China? And what they're going to do is to transit their manufacturing infrastructure-based economy to a high-tech economy, which I think, looking at the way it goes, and every day I've been flooded with some news on my YouTube that this our local couple, one of that just bought a BYD. Um, um, I'm happy for them. Bought a BYD space wagon. Yeah, it's very huge. I love to have them if I have the opportunity. It's very nice. So then they asked interview this local guy, Chinese husband, Singaporean Chinese husband. say that why you want to select BYD compared to the Japanese, though he lists out various aspects of the attributes of BYD. Yeah, I'm not trying to promote for them, but this something like that. So even myself, my handphone, I'm using the China phone. So I think the first why I got the China phone, because I believe that China is something is cooking, and I want to experience their technology. And truly enough, I'm not going to tell the brand of China phone I'm investing for about 2 rounds. I've used their phone, and it lasts me for about 4 years. Yeah, 4 years until the battery just went flat. So I kind of like it. So it's quite durable for the China phone. And when my youngest little girl started to have a handphone, I got them some Korean phone. They dropped a few times, and that's it. The my Korean phone went habis. But that's it. Okay, now from onwards, I gotta give you a China phone. And so he, as usual, averagely he dropped the phone twice, once every 2 days, something like that on average. But up to today, for 2 years, the phone is still working well. On average, she dropped her phone once every 2 years. So to me, I personally feel on a day-to-day living on the China high tech, I think they will succeed for a transition of low-end manufacturing to a high-tech economy. But first, I think there are some clearance on the debt issue. It brought me some comfort. So in a way, I think China has arisen. Of course, there's a lot of other things that you have to look into it. But again, I shared earlier during disclaimer here is that whatever I share is based on my personal conviction. I'm going to do according to what I've planned. But for yourself, you really have to check with financial broker. Is that the right thing to do? Okay. Now let's move on. Now, so this is a Lion OCBC Security HS Tech. It is those Chinese company that listed in Hong Kong Stock Exchange. So the tech company listed at Hong Kong Stock Exchange. So they come up with this index. And I have, I think some weeks ago, no, I think it's quite current. Yeah. So I've recognized that I always look at this. Now let me just go to technical now, because this topic is about technical analysis on how to chart into 2025. So now we understand a little bit about what's happening to the inflation around the world. It's not just US, it's not just in Singapore, but seriously, it's around the world. Inflation is not going to go away, and even our own leaders have mentioned from time to time that inflation is likely to stay much longer. Yeah, so hopefully it won't go up anymore, but at this rate, at the current wanton mee that we're going to pay, we are paying already. It's just going to stay at this level for much longer period of time. I don't think it will come down. Now, let's look at the structure of the market for China stocks, but this is listed in SGX. So, of course, how we can invest in China stocks. If you're interested in the China's tech stocks, this one avenue that you can look at it is called the Lion OCBC Securities, HS Tech. Now, I always look at this kind of behavior. So you still remember earlier the STI that I presented for about 1.5 decades, or maybe coming to 2 decades, been consolidating. I always look out for the first break. Now, so this first break could be the first wave, second wave, and I hope that the third wave will come. But looking at the development that I mentioned earlier, I think there's a possibility. So earlier I did mention that using technical analysis, we must always have a story behind it. Not a story that we created from nothing, but the real story. Yeah. So what's the story is telling us that the market's about to move? But in terms of the behavior science, the price is telling me that it's breaking this range. And it seems that there's a potential that it might move in, into the third wave. Yeah. Now let's look at the market outlook for 2025. Sorry, I'm a bit down, and my wife was having flu the last few days, so I caught on. But thankfully, I'm not in the physical space, so you won't catch my flu. So just bear with me. I may cough here a little bit. Yeah, but thankfully, the first half the session, I'm doing well. But I think it's coming again. Anyway, let me just go through it. This is the last part of my presentation about the outlook of 2025. Unveiling the trends with technical analysis. So let me just quickly go through these three markets. Now, what happened to the year 2022? Just now what I shared. The year 2022 was the first time the inflation started to move up to 9%, if you still remember. So then my investment strategy for the US market is to trade them. Asia market, accumulate, and commodities to buy them. But in 2024, especially after 24th September, I'm waiting for the US China market to perform. For some years by now, I've been waiting for China market to perform. They need to come in some stimulus, some changes. And now there's some changes in the investment strategy. You can take reference to it. For US market, I still intend to trade them. Nothing have changed because it's pretty volatile. And something of investment that you have to be aware of is that when we buy something, invest something, we just don't focus on the upside. Yeah. So we also have to take care on the potential downside risk. Of course, we all know that the US market, if you look at the four major indices as a benchmark, is at the historic high around there. So if there's some accident happen, the drop can be quite drastic. So I want to maintain a safeguard play in the environment that inflation is not totally out yet. So therefore, my US trade I maintain just to trade them. What's the difference between trade and buy? Trade means that I'm very sensitive. I just want to buy, and one swing I cash out. I don't intend to hold for too long. Yeah, because what's the growth, the upside growth there? I think I just want to take it one step at a time. So that's my US market. For Asia market, from accumulating, I've promoted myself from Asia market to buy them. Yeah, so earlier I described to you the difference between accumulating and buying. For those that just join us a bit later, accumulating means that I'm not exactly sure. I think it's good to accumulate to earn some dividend, but I'm not too sure it's gonna start to move in the first wave, second wave, third wave, or not. Yeah. So, but it's good to have some. So therefore, accumulating them is that I just gonna buy some along the timeline. So if I got a chip of them, I'll be more sensitive of the development of the Asian market. So that was Asian market to accumulate them some time ago. But moving on, Asian market to me personally is quite clear that I just want to buy them. Commodities, I think I bought enough. Just gonna continue to hold them. Yeah, which is gold. And let's look at the Asia US market, why trade them. Now I have this is US market. Use Nasdaq as a benchmark. I have three checklists for me to buy and hold the US market. But out of the three checklists, two is cross and only one is tick, which is inflation is coming down. It came down from 9% about 2.6%. But the T bonds, if you look at the T bonds, this was a 30 years chart. Then you could see that the bond market is bad. Yeah. And at the moment is that you have broke this uptrend line since about 2022 around there. And today's the bond prices is on a low price. So it's not a good reflection on the US bonds. And the yield, the interest rate is still at a high point, despite the cut of the interest rate by the Fed Fund, by the central banks of the United States. But the yield, that means the investor, their lending rate is still climbing, as you could see here. So out of the three checklists, two are cross, one is tick. So I have to be very cautious on the US market. I only intend to trade them. Yeah. But if there's three tick, means that the bonds resume its uptrend and the yield is not inverted, is coming back down to about 2%, then I think I would like to buy and hold the US market. As of now, I just got to be very cautious. Yeah. The Asia market is to buy them. And let's look at do a recap of what we shared on the 29th of August 2024. So the first few slides that I shared at the beginning of this presentation was this. But for those that just join us, I just want to refresh a little bit here. Is that about 2 months ago, I shared about this. So where you can see, that I also promised you that I will share with you the yearly chart. So what we're seeing here is the quarterly chart. Then we can see over the span of the last 15 years, the STI has been testing this level about 3004 for the longest time. It tests, it tests, it failed, it tests, it failed, it tests, it failed, it tests, it failed, it tests, it failed. So 3004 to me is very sad. 29 August 2024, I was suspecting that if it ever break above and close above to 3004, I would know exactly what to do moving forward for Singapore market. That means it finally broken above this consolidation period. and I think I would just like to buy and hold them. But where is the Singapore market here today? It is here. But later on, I'm going to share with you the yearly chart. So for the first time, I'm very happy. Finally, Singapore market, we are breaking away from this range. So why? Why? Because of, I believe that the ASEAN market has much more developed. I think Singapore market also benefited from the growth of the ASEAN market, and China is an important factor. Now, this is the yearly chart that we can see here, yearly chart, that this year it failed, and many years it tried, it was resisted, as you could see here. Now, earlier I did mention that if by the end of this year, which is just about one and a half, less than one and a half investment week, 1.5 investment month away, if you can close here, because the title here tonight is that revealing the market outlook for 2025. So end of this year, you can close here. I will confidently say that finally, for the first time for Singapore stock market, for the first time in history, we have broke above this major resistance. Okay, this is very similar to the goal at the end of 2023. So this year, 2024, it was a very good year for me for the gold market. I basically whatever invested in gold this year just brought me to a much higher level in terms of my bookkeeping. Yeah. So this is what I hope to see. We have 1.5 months away. I hope that close here. And next year, I will continue to buy on dips on those stocks that I have a new liking over them for Singapore market. Now, so for those who are interested to believe in the China story, I do believe in them, the China story. Earlier, we discussed about the China debt. We have a better understanding about what this China debt is all about. And how about those businesses that have, including, is Wilma here? No, Wilma is not here. There's a lot of local companies or overseas company listed in Singapore that they have a big part of their business in China. It may not be a Chinese company, but they have a big part of business operation in China. So this is what I shortlisted from. Yeah, Wilma is here. Right? Yeah, so from the Kopi segment on the SGX website. So once a while they have many good stuff. I would encourage you to read about the team behind writing it. So I extracted from their short listing of the some listed company here in Singapore that have are heavy on China market. So this is not a recommendation that you should buy all of them, but you can apply what I just shared with you on the how to look at the chart. Look out for consolidation, look out for the first break. Yeah, so this is what I call the value stage. If it comes, then you got to look deeper into the company. What are they doing? The ratio at this price, is it worth a buy or not? Yeah. So I'm gonna move on next slide where I'll not come back. So you may want to take a snapshot of this. Yeah. Okay. Now, so this is what I shortlisted from all of them, which I find that earlier I mentioned that I like to look at structurally in terms of technical analysis. I like to look at those that have range bound for a long time. Yeah, you can see the range bound for a long time there is to move up. So then after that, I'm going to investigate what is it all about. Yeah, so I like to look at the first move. Then, because I also believe that the market move with a reason. Yeah, so finally it broke away. It doesn't matter if you're going to pay a higher price. I will still pay for a higher price because I rather than I pay somewhere around here, but the market is not moving. So in term of that, my investment sum is not very productive. I rather to buy something to more productive, where it really start to move and it may trend. I hope it'll trend. But having said that, I've not buy in a lot, so that's not my recommendation. This is for educational purpose. I just want to share with you what I'm seeing. Yeah, structurally. So we could see a range, it start to move up. We could see a range, it start to move up. Is it the first wave, second wave, moving on third wave? We have Yang Zhejiang Finance. It's been range bound for the longest time and finally starting to move up. Is this the first wave, second wave, and moving to the third wave? And so it's a Hong Leong Asia. Is it a China company? No, it's not a China company, but they have a big part of their business in China. So we could see that it start to move up and come down. So again, if you miss out taking this screenshot, please go ahead. Okay. Now let's move on to what I shared about when the market range bound, I always like to look out for the first wave. Okay, just some past case study. So I have this weekly case study with some of my participants right now. And so on this date, on 20th September 2022, I share about Yang Zijiang, not Yang Zijiang Finance, that it was dead for quite a while. Yeah, market been range bound for quite a while at about 102. So I felt that there was a 102 was here. That was in year 2022, and about here. Yeah, about here. 102 is here. So you could see that there was a range bound and market started to move up. So this is why I personally call it as a value stage. Its value is time to buy because it break away from this range or income stage. So and today where's Yang Zijiang today? It is here. So earlier we did study about the Yang Zijiang finance. Structurally, it is there. Yeah, so we could see a similarity in it. So then Yang Zijiang was at 1.02. 1.02 was here, but today is have entered into a growth stage. Okay, now let's look at another one before we go into the Q&A. SGX, I always like SGX. Since about 2022, I've been investing in SGX, but it's more like accumulation. But now I think things are different. It's going to start to move. Now, just about 2 months ago, with the weekly case study with the whole lot of them, I give them a case study, ask them a few questions. As you can see, question 1, question 2, question 3, they are supposed to answer me before I give them my model answer. Now, so 20th August 2024, I shared that SGX at about 10.55 have entered into a first wave or value stage. Before that, it was kind of range bound for the longest time. And I like this move. Just the move alone, I like it. Then, of course, we have to examine why SGX. So earlier we studied into, I think the ASEAN is on the rise, and Singapore is a broker of our this region. So as ASEAN rise and especially China start to make their shift and move, and I think Singapore market is going to benefit. So one of the key reasons why I'm interested in SGX, although I'm speaking to SGX itself, there's no conflict of interest because I don't work for SGX. Yeah, so they are invited speaker here. So there's no conflict of interest here. Is that because you look at it fundamentally is that if Singapore market is going to um, gain from the growth for ASEAN and especially China. So I think SGX will also benefit as well. So that's my thoughts. And bear in mind that SGX is not just their business model is not just stocks, Singapore stocks. I think about half of them, maybe 40%, come from commodities, derivatives. Yeah, so a lot of corporates, institutions are trading all this kind of product. Singapore market, stock market is a portion of it, not all. So, of course, many local investors associate SGX as Singapore stocks. Yes, it is, but there's a big fraction of their profit comes from commodities. Yeah. So where is SGX today? So I just captured this 2.5 hours ago. That we could see that at the point of discussion of 20 August, it was here about 10.55, and today is at 12.48. Yeah. So it's like suddenly just jump up. So there's a powerful accumulation. And that's the power of being sharp, where you see that this first wave, that this is the first wave, second wave, I believe. And I hope that the third wave will continue. Okay, so I just want to give you some introduction, and of course we can go deeper into it. And let's go into the time of Q&A right now. I hope they have submitted the questions where I will provide you the pigeonhole code. But for those that want to connect with me, I have this YouTube channel called my name, KONHUW joined together. You can go and look at go and search for it and subscribe to it. So every week on every Sunday 10 a.m. I will launch a new video. The new video I launch for this week will be the 3 checklists of the financial market. Well, the 3 checklists. So earlier I think you come across, but during that video, the 10 minutes long video, I explained into greater depth how to conduct the 3 checklists of the financial market. And this is my website. For more resources, education resources, you can visit my website, waypedia.com. And what you can do here is that I have this program there called Timing the Market. You just go to website, go to individual, you'll find Timing the Market. You could apply the same coupon code that the pigeonhole that we'll be using tonight. So go through it. I think there's a 30% discount. You just go through the curriculum. If it works for you, I hope they can join us with the rest that we do weekly case study on the market. Yeah, so it's a one-time payment. I hope they can contribute and share some ideas together with the rest. So this is my email address, contact@waypeter.com. So again, earlier I said that about China or any other topic I delivered. If it's not accurate, please share with me some idea. What is your thoughts on that? Yeah. So this pigeonhole. What I can do is that. So this is also the discount code that I can use 21NOV24. Yeah, for the program. There's 30% discount. But for the pigeonhole, you can key in 21NOV24. You can submit your questions, or you could consider to use the QR code. Okay, let me just go to my share screen on my Google Chrome and see if there's any questions. Okay, now continue to come in your question. I'm not too sure is this a QR code. I believe it's a QR code, so you can continue to send in your question. The first question is that is China market still prospective with consideration to the US and China trade war? I think the US and China trade war will be ongoing from what I see personally. Um, I think China just want to continue to move on. Whatever may come, it seems to me that they are expecting the trade war to hit them from time to time. But this is just going to continue to walk their path. That's what I'm saying. Um, Continue to develop the technology, continue to deleverage. If you can see that in since about late 2021 to 2022, that's where they start. The China start their deleveraging on their property market, on their property developers and those investors. So they have curb on the property market, which I personally find that is necessary because we also know that China property market was being driven by greedy property developer. So then, of course, the individual investors will get sucked into it. So I think it's important to come in to clean up the whole system, which I think it seems to me that they are doing it pretty successfully. And now the China property, I think there's some take up among their good deliveries to those who have made a purchase. So now, from what I see, your question is that China perspective, they know that the trade war will continue to come since it started somewhere around 2018 or 2019, the trade war. It will continue to come, but they just have to continue to do what is right, which is continue in that development for the high tech industry. And on the debt part, I think that what we have discussed about it, they are the central bank government are taking over this debt swap to manage the debt problem that the local governments have. So I think that they are in good shape. And so that's my reply to you. So I hope that this is good. Okay, do vote for the question so I know what to take on because we have another 2 minutes left for this delivery. So what chart time frame do you use for technical analysis? So I think it's a very good question, but I would say that earlier I demonstrated using generally weekly chart, quarterly chart, right? So now, whatever I demonstrated to you, the range, then you got the first wave, second wave, third wave, potentially third wave, we hope that you'll come. Now you try to use it on the 5 minutes or 60 minutes chart if you're a short-term trader, if you are. But if not, then you can always use what I'm using, the weekly chart, quarterly chart, even yearly chart. So now your question about what time frame to use for technical analysis, let me just reverse that. It really depends on what you are doing. Are you a long-term investor, or are you a mid-term investor, or are you a short-term trader? So if you're a long-term investor, of course, you can look at quarterly chart, monthly chart, weekly chart, or even the yearly chart. But using the principle behind, if you are a trader, you can you can apply whatever I shared tonight on the 60 minutes chart. So I hope that that will answer your reply. So uh am I a long-term investor or short-term trader? I'm both actually. Yeah. So but you have no time, then I don't trade. Yeah. But if I have some idea over the next few years, then I will go for long-term investing. So tonight, what I share is for long-term investing into 2025 and beyond. Okay, I think just keep the question going. Now, were the US market in recession in 2025? As of the GDP, not yet, not quite. But I think whether recession come or not, I hope it will not come. Um, but what I'm seeing here is that my focus tonight is about ASEAN market, Asia market, Singapore market, China market is big, is important. It seems to me that this part of the world, we are charting our own path. The trade war, geopolitical tension, that one we have no control. But when doing business, we have some control. Yeah, so we want to maintain friendly relationship. We want to continue for China. They want to continue to in their advancement in their high-tech industry. They want to continue to build, which is a good thing. And so is for Singapore market as well. We want to continue to build. So for SGX, I hope that there are more local company that can get listing on the Singapore market. So you can see that yes, when US have a recession, the whole world will suffer. But whether it will come, I would not like to. I can't forecast whether it will come. So what you can do is that you can use the resources that I have. So again, I'm not selling for them. Trading View, I think there's a free account. You can get hold of one of the plain chart, or you can just Google the US GDP chart. Yeah, so how you can look at the US GDP chart is a quarterly chart. You try to understand the trend. Yeah, so your question is that maybe I task you as a homework. Here is that you look at the GDP chart over the past decades and the last 2, 3 years. You're going to look at the trend. Where is it heading? If it is heading towards downwards, like what we discussed tonight, you're able to identify what's the downtrend, or is it stagnated, is moving up? Yeah, so if it's stagnated, it's moving up. Just now we study about range and first wave, second wave. Where is it? If it's stagnated, it's moving down, then likely recession may hit them. Yeah, so therefore, I'm suspecting that the ASEAN market are ready for that. We are forming our own friendship, cross-border trade, all this and that. So whatever outcome may be, we still have to live. We still have to make business, and we still have to stay friendly to continue this journey. Okay, so this one I think I would not like to speculate too much, but my concern is about inflation. Yeah. Yeah, I think I'll just based on remaining time, the next maybe 5 minutes, I'm just gonna take them all the questions. Do you use any other indicators than trendline and SR? What is SR? Yeah. Anyway, do you use other indicator? Yes, I use other indicator. I use indicator like MACD, but I think that's not too crucial. I use all this indicator to look out for divergence rather than entry point. So when I use entry point, I use based on the price behavior itself. For example, the candlesticks, and I would like to study into the volume as well. But if you want, can join the rest. We will have this weekly discussion. I think it's quite fun. My whole idea is that every week, if I share a case study, um, given time, they'll become proficient, which is true. Where I see the development of many of them after a while, when I throw them a question, it's always the few that answer the question, but you have to look back at the few that a few years ago they are not like that, but today they are quite pro. Yeah. So what my belief is true, that if I'm going to throw you a exercise every week, but you participate every week, you're just going to grow from strength to strength. Yes, I use indicator, but not as entry. But if you're using using indicator to enter the market, it may works, but I use it to look out for divergence. Okay. So do you view and analyze the China stock and US stock situation separately? I tend to view them as a flow of funds where it's happening, where you could see that, in fact, what I heard from ST podcast, FT, yeah, Financial Time podcast, is that there was a last week news that this researcher find that the Warren Buffett have offload a lot of shares. I think they have a cash Berkshire Hathaway of cash about 160 billion US dollars is offloading shares in US. And but so what are this cash sitting there? Yeah, I'm not sure, but I think many of them are trying to offload a little bit, but they're shifting the fund to where? I believe they're shifting fund the Asia market. So there's a flight to quality. If the US market is getting a bit riskier, the money is always there. They will have to flow to somewhere. So that's why I see that the when this China have this stimulus on the 24th of September, it draw great interest. So continue to keep track. Yeah. So I don't view it separately. I view it as one whole ecosystem. Money is always there. So over the past 2 years, a lot of money flowed to the commodities, the stock market, no, sorry, not stock market, the gold market, the silver market. But now I suspect that the money is coming into the Asia market. Yeah, so that's why you see that Singapore market for the first time is now trading at 3,700 points, and I hope that the my yearly analysis it will close at 3,007. You don't have to close too high, but just close at 3,007 because to me it's significant. It represents that for the first time at the yearly close, it closed above the range. It also represents that the maybe the second and the third wave may come. But what's the story behind it? It could be a flight to quality. Money from US and West is flowing to Asia. It could be. Yeah. So maybe the last question that we have. What resources did you say is like SGX is free? The audio quality wasn't good at my side. Okay. Um, the resources, you just go to the SGX resources. Maybe what I can do is that I just share a few, the first few slides. Allow me to share the content of the micro PPT again. I hope you're seeing my PPT right now. So these are resources. Oops, let me just move back up again. Okay, so you can look at these resources. Knowledge is wealth. You can take a screenshot in the Telegram on the gateway. I think that's the most direct that you receive direct inputs whenever they publish a new publication. Okay, let me just share a few my own resources then. Yeah. For those that want to get connected, that you miss out the last slides that I projected. So this is my last slide, my YouTube channel. Is got some sponsorship to create content on a weekly basis. What's happening to the market in a macro way. Of course, my macro always come with some technical analysis. You can visit my YouTube channel at Conhow. My name join together. For those that are interested to join the weekly case study, the program is called Timing the Market. It's called waypedia.com. Yeah, could you go there, go to individual. You can apply the discount code 30% discount for the next 1 hour 21 NOV 24. Yeah, you will get your discount. So lastly, you can always email me your thoughts about market on to my email at conhowet@waypedia.com. So with that, thank you so much for staying through over the last 1 hour and almost 7 minutes now. Yeah. So I hope that you have a great year. The year has not ended. We have around 1.5 months to go. I definitely hope that tonight the show is useful for you to prepare what's coming ahead in 2025. I think there's a lot of opportunity, especially in Singapore market and in ASEAN market and Asia market. So do connect with me if you can. So with that, thank you so much. I hope that you have a very good evening and definitely a great weeks ahead. Thank you.